Good morning and welcome to today's webinar, which goes by the name Real-Time Daily Trading Ideas. This is our internationally oriented webinar addressed to traders all over the world. We will be speaking about trading ideas, strategies, market screenings, and we'll be answering your questions. My name is Alex Raftopoulos and I'm very happy to be moderating this webinar with you. Before we can start with the actual webinar, we will briefly present the risk disclaimer. Trading with financial instruments offered by Admiral Markets carries a high level of risk, which is not suitable for all investors due to its complex nature. Please make yourself familiar with these instruments by using a demo account if you are a starter. Please feel free to contact us if you need any assistance with that. Please also note that none of this is investment advice. The statements made in this webinar only represent the personal opinion of our traders. You can also find the whole risk disclaimer on our website. Here you can see the schedule for the week. Today it's Paul's turn. And before I finish off with the introduction, I would like to invite everyone interested in trading to try us out and benefit from the best index and forex offerings with spreads of just 0.8 pips. Please feel free to have a look around our website and explore our international activities, and do not hesitate to contact us should you have any questions. Well, enough of me for the moment. Now it's Paul's turn. Good morning, Paul. How are you? And what's your outlook of the markets?
Good morning, Alex. Good morning, everybody. I hope you can hear my voice. Hope you can see my screens. So it's here we are, Tuesday, the 5th of February. So thanks for joining us this morning. Thanks for the introduction, Alexander. We had the last few weeks. There's been a bit of a flurry, okay, in terms of the amount of things that have been going on within markets. But as always, markets, they surge, then they rest, they surge, then they rest. And after sort of the flurry of the last couple of weeks, this week is a kind of a relatively quiet week so far. I appreciate it's only Tuesday morning, but what we have, it's a relatively quiet week in terms of economic news that's coming out, in terms of certainly the sort of stated economic news. Today, I think we've got in America, later on this afternoon, we've got the ISM numbers. Tomorrow is, I think, Kiwi employment figures, and on Friday we've got the Canadian employment numbers, and then on Thursday we've got Mr. Powell speaking, and we've also got the Bank of England rate decision. So compared to sort of, let's say, like last week where we had all of the Brexit votes and NFP, etc., it's a relatively quiet week, and I think that markets are, my own views, markets are sort of analysing what's happened over the last couple of weeks and getting ready for their next move, and hopefully as we go through some of the charts I want to discuss with you today, ladies and gentlemen, maybe that will sort of bear that out. But what it will mean is that we've got, hopefully today we should have some time for some questions. So if there's a particular instrument that you'd like us to have a little look at, then I'll be happy to sort of try and see what we can do. So as always, I start with a very quick just run through some of the major FX pairs. Of course, the very popular trading instruments here at Admiral Markets. Here we go. As always, let's start dollar index weekly chart here. I know those of you who are just joining us for you're either new to trading or joining us for the first time. My chart's quite simple: green bullish, red bearish candles, a blue 20 simple moving average, a red 50 simple, a green simple 200 period moving average, drawing on horizontal lines of support and resistance, some significant trend lines and patterns as we see them. Dollar index, okay, the number there is still that number we've been looking at for a long time, 95. It's bounced off there for a while, and I said a couple of weeks ago that I was on the let's say on the bigger picture, wondering to see whether we would get a drift up towards around about that 96.50 to 96.80 area, and if we did, then I'd be looking for if there were bearish rejection patterns there, then that might give us the indication of a head and shoulders pattern, which would be longer term for the rest of the year, rather bearish for the dollar. But as always, we have a plan there, but I have to trade what I see at the moment. It's been a little bit sort of scratchy the last couple of weeks. Okay, a lot of that is based upon the sort of on-off comments from Mr. Trump regarding the sort of China trade talks and what's going on in the stock market itself. And I'm going to have a look at that in a little bit later now. And I appreciate some people have asked me to look at SP 500. Thanks, Eric, and gold, and we'll happily do that. And then also we'll look at, yeah, as I said, a couple of the big major FX pairs. So, you know, in the dollar itself at the moment, even though it might have a bit of a, let's say, you know, bigger vision, at the moment it's a little bit, you know, it's not really much going on there. And personally, I think that's borne out by when I look at the euro dollar chart as well. Here we are, you know, it's the weekly chart, and you know, and I said a couple of weeks ago that I thought price was being sort of, you know, squashed between the sort of 113, 200 period moving average and the sort of 20 period moving average. They're up at around about 114 to 114.50 to 115. Okay, and you know, and we've really just been doing that. We've just been bouncing about back and forth. If I go down to the daily chart, okay, we can see that realistically between about 113 and 115.30, but we're still, you know, sort of squeezed up there in that particular range at the moment. We're waiting for some sort of you know, event or some sort of particular piece of news that would actually give us an indication of which way we are to move next. So, you know, I don't see that as a, you know, terribly exciting moment. I see it as a little bit listless, a little bit, you know, just a little bit sort of biding its time at the moment. And, you know, as I say, sometimes that happens with markets. Sometimes that happens. It's not all action. Actually, quite often, you know, there can be quite quiet periods. All right, you know, just relatively quiet periods as markets take stock after a flurry of news and information and moves, and then they sort of catch their breath before they decide what to do next. If we look at, I know, you know, pound against dollar was of interest to traders. Let's just go out to the weekly chart. You know, we had this great run for a couple of weeks there. A little bit of sterling strength and dollar weakness ran in, and we ran up towards that sort of ran up to the sort of weekly 50 region there, about 132. But then, you know, if we go down to the daily chart, yeah, we had a, you know, a really nice rally, but actually over the last week or so, we've had a little bit of a drift away from that. And you might remember last week we talked about how you know, last week we talked about how, you know, we had a great uptrend. We'd had a couple of you know, a couple of earlier buys on pound dollar done well. And last week we were looking at a bit of a 4-hour candle forming. But if you remember what I said, I was saying that, you know, we were going into the big Brexit vote that day, and to be very, very wary about actually trading anything on sterling, just because there would be a lot of maneuvers. But what we saw was that, you know, we had a flurry of amendments being voted on in the House of Parliament last Tuesday evening. Pretty much most of them all got kicked into the long grass. And what we saw with that was actually, you know, a drift away, okay, a drift away. And interestingly enough, you know, if I just look at this here, you know, we're looking here is that, you know, this then provided us, you know, what was a flag actually turned into a double top there. I'd look at that as a double top, finishing with a nice engulfing candle. Okay, if you want to know more about that, then you can go to the Admiral Markets YouTube page, where you'll find in the archive there the earlier sessions of the Monday Mastering the 4 M's of Trading webinar, where we talked about reversal patterns, talked about engulfing candles. What we also talked about was an element here called a sort of the power of the 20 period moving average. We can see that once we'd had the double top and the drift down, we had a rally back up. We can see that the 20 period moving average, which had acted, you know, as a good element of support on the rise, was now acting as dynamic resistance on the move down. And hopefully you can just see there that it's been really nice there in terms of providing sort of, you know, it's been a roof over the top of pound against dollar. And I would expect pound dollar to sort of drift down today, that extra 15 or so pips back towards that 130 region. Okay, big round number there. So what I'll be doing is, you know, I'll be just watching and waiting to see how it reacts at 130. Will we actually get, you know, will that now become support, or will we drift beneath it lower? Okay, which is an indication of some sterling weakness. So definitely be keeping an eye on that. Okay, there's not a trade right there this moment. I said I'd be waiting to see if it to drift down to that 130 zone and sort of then see how it reacts there. But, you know, we can just on that continued topic of, you know, sort of dollar. You're just looking at the dollar yen here. Okay, it's been a little bit. All of the yen pairs have been a little bit sort of skewed by the sort of flash crash, the yen flash crash that we had at the end of last year. So the the charts are a little bit skewed. People are scratching their heads a little bit about what way we'd be looking to operate. If you look there, actually, after the the sort of the flash crash there that that we had, sort of, I think it was the sort of first real trading day of the year, if I remember. Then we basically we've just drifted a little bit, nothing really too exciting. What I'm kind of interested and intrigued at is, here we are around about 110 on dollar yen. That's what I'm taking an eye on. We had, let me just zoom out here a little bit for us, okay? Just put this away so we can see. So, what we had was we had a bit of a every time we got up towards that 110 area, it's retreated away. We had a sort of a nice trade there a couple of weeks ago on the big key reversal there that we ran down towards just being in front of NFP last week. Then invariably what we've seen is we saw a shoot up there to the 110 area, and at this moment, okay, I see prices just drifting around there a little bit. Some people might call that a bit of a very scruffy sort of double top. We've got a rejection candle there. Personally, what I'll be saying is, I'm actually on that 4-hour chart. I'll be looking actually just to watch, see if will price drift down into around about this 109.50 zone. That's what I'll be watching to see. Okay, could it do that? We'd have the 20, the 50, and the 200 all coming into that zone there. Okay, price coming down into there, finding support before it made a leg up. Okay, that would be a leg up. What we've had is yen strength over the last few weeks, but I think there's a case of for it. If you look at the charts at the moment, the yen has been weakening a little bit. I think part of that is Mr. Trump has been saying good things about the sort of the U.S.-China trade talks, which is his want. So of course, as he's been passing that on, that invariably gives people a bit of a momentary feel-good factor, and then invariably, we sort of move away from a risk-off environment. So hence why we've seen yen weakening a little bit across the board over the last week or so. So it wouldn't surprise me if we had a little bit of a drift down, and then maybe a leg up, a back move towards that sort of 111 area. That's what I'd actually be looking that's what I'll be looking towards there. So as I said, it's there's not a trade there right here at this moment. It's more a case of just to see how we react at 110, and certainly if I drift down to 109.50, and if I get bullish candles there, bullish formations there, then I'd probably look to be a buyer back up to 110 with hopefully a longer target of treble one on the way. So let's have a little quick look at Europe. All right, here we go. Euro sterling. Okay, one of my favorite trading instruments. And here's the weekly chart as always. So those of you who join me every week, we've been talking about this for months now. Okay, we can see that price has just been battering between 87.50 and 90 to the north side. And about 2 weeks ago, we got up to 90. Okay, we had a real big bearish engulfing key reversal candle, and price fell down, and it fell back down, and it closed significantly lower than it had done for a good while, and then invariably beneath that 87.50 level. But if you have a look at what happened last week, ladies and gentlemen, we clawed its way back up and closed just above that 87.50 area there. Well, we had a close of 87.57. So it's just it's fascinating to me that every time it gets to 90, it gets battered down. Every time it gets down to around about sort of 87.50, 87, 86.50, it gets sort of bid up as well. Okay, we're clearly in a bit of a range there. So I'd be keeping an eye on that. Okay, just seeing that seeing how we operate there. But it's a case of will we now get I'll be looking to see could we get an opportunity for price to drift back up towards the middle of the zone, maybe even return to that 90 area. Okay, it just seems to be doesn't seem to want to break out of those particular ranges at the moment. It seems to be just nudging its way either side to sort of pick up orders or stop losses right before it then drifts back in the opposite direction. So let's. I know we've had a quick questions about S&P and gold, and I think we had a question there about pound yen as well. So I'll try and see if I can carry that into us. I know some people are still having an interest in Bitcoin. Let me just see if I can find my chart here, just to give us a very, very quick update. There's not as much on there to talk about as normally. At Bitcoin weekly. Okay, remember we talked about 6,000 level, descending triangle broke. We talked about how the next level was down around about 3,000, but all I see that at the moment is that's us. If I zoom in there, we're just, I see us there. We're just, we're just basically sort of sat on that weekly 200 there. Okay, that's, that weekly 200, that's, acting as pretty significant support there. Okay, what we're looking there around about, around about the 3,300 area, and I just see as that's what it's just sat on there at the moment. Okay, I know some people might look and trade that on a shorter time frame, but to be honest, I don't find that, I don't find anything really interesting. That is, to me, that is, drifting away again. Okay, and if I had to call anything, I'd probably be saying we're more likely to go down towards 3 than we are to go back up to 5 at this particular moment, looking at what we see there. So let's have a quick look at some of the American indexes. Okay, let's bring up what we've got here. S&P 500. S&P 500. Right, here we go, weekly chart, and we had a quite significant drop from back in September. We hit the weekly 200, and we've bounced pretty strongly up there. And at the moment, I see us look at there's the weekly sort of just running up there into that weekly 50. Okay, weekly 50 is there around about 27.30. But if I go down to the daily chart in particular, okay, we can see that we had a pretty stupendous sell-off there in December, which was finished with this big key reversal candle, big engulfing candle. All right, okay, end of December, and then we've just rallied up there so far. And what I'm looking at here is that once again I can see that here's the daily 200 around about the 27.40 area, and personally what I'll be looking at is to see will price drift back up to there. And then what will happen once it gets. So we've always had a bit of a reaction at the daily 200, and that's what I'll be looking at there at the moment. And that's see that that's a message across one or two of the other American indices. So if I look at let's have a look at Nasdaq. Okay, Nasdaq on the weekly chart. Okay, once again in the same way the S&P 500. Okay, it's just rallying its way up there towards around about that sort of weekly 50 period moving average. That's around about 69.85. Okay, we're just there, not too far off it. We go down to the daily chart. Okay, there we go. There's the daily 200s there around about 7,040, and so I'd be just looking to see will price sort of just drift its way up towards there. That's what I'll be looking at. Is that daily 200 going to act as a sort of as a magnet? Basically, will it just draw price in towards it? Okay, so as I said, I don't have a trade on those indices right this moment. I'm just waiting to see will price sort of drift its way back up towards that up towards those areas to and then see how price reacts at those areas before giving me an opportunity to sort of enter that particular instrument. I think I've got Dow Jones on here. Okay, let's have a very quick look on here. The interesting thing is Dow Jones has got above both its 20 and 50 on the weekly chart. Okay, that gives us some of an interest, and I think those rallies we've seen over the last few weeks. That's been I think personally that's a lot to do with sort of the rhetoric around the US-China trade talks. My own view is for the first part of this year is that we're on a bit of a knife edge. Namely, if those trade talks go well, then which appears to be at the moment this week, they're going well, then we can expect a sort of a continued rally in indices, okay, in stock markets. However, if those talks break down, well then we'd see a dramatic sell-off. Now, if we have a look here on the Dow, we've just looked at S&P 500 and Nasdaq, which have drifted, looking to see if they'll drift up to their 200. The Dow is leading the charge. You can see both in the on the weekly, but here also on the daily. We had Mr. Trump coming out sort of saying that it was the best sort of January on the Dow for 50 years, which was might be right, but it still pales into insignificance compared to the sell-off we had in December and the sell-off we've had since September, basically. So it's all about context, ladies and gentlemen. There's most definitely about seeing what else is going on there. So if we look at that there at the moment, I'm looking to see, we can see that daily 200 is acting as acting as a bit of dynamic support. Then you're looking really up to around about that 25,500 to sort of 25,800. That would be where the sort of next area I'll be looking for us to move towards. Okay, so that's leading the S&P 500 and the Nasdaq. And as I said, that is I think they will drift, a little bit until we get the some really kind of proper firm information out of the those trade talks. As I think that's pretty much what's driving everything at this moment, certainly this first quarter. Even more so than Brexit, and also what the kind of influence that will have upon markets themselves. So there you go. A little bit of a quick fly through of there must be about 8 or 9 instruments we can look at there. Okay, as I said, this week it's a little bit of a quiet week. That happens. We just take stock after a rather exciting January, and then it'll be a little bit quiet week, and then as always, markets they surge, then they rest, and so we get ready for our next surge. So, Alexander, if we've got time, if there's a question or two, I'm happy to take them. Otherwise, I wish you all the best of success in your own trading, ladies and gentlemen.
Thank you, Paul. There's no questions for you at the moment. I think there's not going to come another question. I think I can finish the webinar. Thank you very much. Thank you very much for your comprehensive analysis, Paul. Thanks to the audience for listening. I hope you enjoyed today's webinar. If you did enjoy it and would like to review it, you can do so anytime. Just give us an hour or so to upload it onto YouTube. I wish everyone a good day ahead. Bye.